Hello, Dylan Langei, branch manager and home loan officer here at Evergreen Home Loans here in Bellingham, Washington. And if you're watching this, you are geared up for the October mortgage update. Literally can't believe it's the week of Halloween. Hopefully you guys all have your costumes going. Me and the family, we're doing Scooby-Doo because then we can include Beckham, our dog, of course. And then Kara and I are doing Barbie and Ken. So I will not be dyeing my hair blonde. I've got a wig. Don't worry. The November mortgage update, I won't have dyed tips, or what do you call them? Frosted tips. So nothing like that. But super excited. We love Halloween. We got our house all decorated, skeletons and everything like that. So hopefully you have some fun plans geared up. But today, why you are here is I'm going to talk about the new low down payments for 2 to 4 unit now with Fannie Mae and Freddie Mac on conforming loans, why that matters, what's the hangups, right? What are the little nuances? I've seen a lot of TikTok videos and all that on, new low down payment options for investment properties, right? I think that's to get you to click, right? So I'm going to show you guys the reality of it and the reality in our Whatcom County market. We're also going to talk about the new conforming loan limits. We have temporary new conforming loan limits here for 2024 until they get released. And then, of course, we'll talk about rates and all the normal stuff. So once again, if you're watching this on YouTube, either you're on my email list, you've seen it on social media, you've come across it, do subscribe to the YouTube channel. I do many videos on our individual products, our innovative products. I do monthly mortgage updates like this. You can also go to WhatcomHomeLoans.com and you can find all of my mortgage updates under resources, also the videos, and we will be going through the loan limits tab here in a second. So the quick nugget of the month. So Fannie and Freddie are now allowing 5% down for 2 to 4 unit properties. Okay, let's dive into this piece first. So what I want to do is I want to show you guys what it used to be and what it currently is. So if you wanted, historically, if you wanted a low down payment for a duplex, triplex, or fourplex, you had to go FHA. FHA allows 3.5% down on a multi-unit property, 2 to 4 unit. The caveat and the catch with FHA is they have something called a self-sufficiency test for 3 and 4 unit properties. So I've done single family homes on FHA. I've done duplexes with 3.5% down. No problem. When you get to a 3 to 4 unit and you're doing FHA financing, you have to pass what's called that self-sufficiency test. Basically, the rents, 75% of the gross rents in all the units have to cover the monthly mortgage payment. That is very difficult to do, given what rates are, given what home values are. It typically doesn't work out. So what's awesome about the conventional version is it does not have the self-sufficiency test. So it makes it more possible to do a 3-4 unit with 5% down or with a lower down payment. So with conventional loans, you can see here a primary purchase, and these are our primary. You need to live in the unit. This is not an investment property. I've seen many TikToks, new way to buy an investment property. No, you need to own or occupy the property. But obviously the other units you can rent out, and we can use proposed rental payments to offset that debt to help you qualify. So the current down payment for a duplex on conventional is 15% down. The new down payment is 5% down. Okay. If you were buying a 3 to 4 unit purchase and it's primary residence, once again, it was 25% down. It is now 5% down. Okay, so that's the big change. It is effective as of November 18th. So we've got a few weeks until this is in place. But, if you're somebody that's maybe looking at broadening their rental portfolio and you can live in that unit, the rule is, and you're going to sign this on your loan paperwork, you have to live there for 1 year, for 12 months. And you need to own or occupy that property within 60 days of closing. So you need to also look at the lease agreements and make sure that you can occupy that property in 60 days. Okay, so that's the good. That's the amazing part of this, right? Let's look at some reality. So I looked up in Bellingham multi-units. Let me make my face a little smaller. You can just go on Redfin. You can go Zillow, whatever. I like Redfin. So I looked at for sale multi-unit properties, and I looked in Bellingham. There's like 5. I looked in Whatcom County thinking there'd be a lot more. There's 9, right? Think about multi-unit properties though. Typically, at least in Bellingham, right? That's where a lot of my rental properties are. Who are those tenants, right? A lot of them are students. Well, when does school start, right? That August, September time. So a lot of those you have on that year lease. So that's why you see a lot of multi-units coming up in spring, maybe summer, where they haven't renewed that lease or they're on month to month and somebody wants to get out of being a landlord. So right now, not a lot of inventory. So that's one problem. The other thing I want to really drive home this FHA thing. So this is a 4-unit property in Bellingham, okay, listed for $787,500. I want to talk about the cool part about this 5% down and how you don't need to pass self-sufficiency. So if you look at the leases on this property, 775, I need a calculator for this to add these all up. 775 plus 825, right? That's this one here, plus another 825, which is right here, plus 895. This property is pulling in $3,320 a month. Okay, $3,320 a month. So per FHA guidelines, if I want to do 3.5% down, I would take that times 0.75. My mortgage payment needs to be under $2,490. Okay, it'd be great if my mortgage payment was under that. Well, let's look at the reality. Okay, if you look at the average 30-year fixed mortgage in the United States, it's in the high 7s. Okay, so there's a lot of different variables, and I'm going to talk about interest rates here in a second. But let's just say that rate is 7.79, 30-year fixed. You pay at asking price, and I do 3.5% down. Okay, my mortgage payment is $6,594. That's $4,000 more than what would pass the self-sufficiency test on FHA. So on conventional, it's doable with 5% down. However, is it a smart purchase? You're paying $6,500 a month, right? You're getting $3,300, but you're living in 1 unit. So take out $800 there. Maybe you're getting $2,500. So, $6,500 minus $2,500, you're paying $4,000 a month to live in one of these 1-bedrooms. So it's fantastic news, maybe in a different market where we've got lower rates, lower purchase prices, but it does help with actually making these 3 or 4 unit purchases possible with a lower down payment. So that's the low down payment. The reality though is it's these monthly payments are high, especially if you don't put that much money down. And so that's what's, it's great. Fannie and Freddie are trying to do things to make, home affordability more reachable, more doable. But I like to bring you guys the reality as well on these. So that is the new 5% down on 2 to 4 units. I've had clients send me TikTok videos and YouTube shorts and stuff like, wow, is this real? This is awesome. Yes, it is awesome. It's very awesome. You don't have to pass self-sufficiency, but do the numbers make sense? New conforming loan limits. So the new conforming loan limits, if you go to my website, go into resources, loan limits, so whatcomhomeloans.com/loan limits. I've got the 2023 loan limits. So for conventional loans, a single unit was $726,200. If you're somebody that's watching this, you have no idea what conventional conforming, what that means. So if you borrow, and this is a loan amount, not a purchase price. If you borrow under $726,200, you're in conforming loan limits. What does that mean? That means that you're getting a loan with Fannie Mae, Freddie Mac. We've got higher debt to income ratio, so you can typically afford more. You don't need to have as much in reserves. There's not as strict of guidelines. It's just an easier lending platform than the jumbo investors. Okay, so for a duplex, it was $929, triplex and fourplex right there. FHA has not released their new loan limits, and FHA does change by county. And then also the conforming loan limits do change by county if you're in a high-cost county like King County, and those have not been released yet. So the new temporary loan limits that we are honoring is up to $750 on a single unit, up from $726, up to $960 on a duplex, up from $929, 1.1 for a 3 to 4 unit, which is slightly up from the 3 unit. The 4 unit has not changed yet. So once again, if you're looking at this duplex, this one would be doable with 5% down because of the loan amount and you can do 5% down, closing after November 18th. However, does a monthly payment make sense? Alrighty. Let me know if you have any questions on either of those. Also, if you're on YouTube, write some comments down on what you think. If you've seen some YouTube shorts, some TikTok stuff, like I have, the headline, right? They want you to, the clickbait, if you will. What are your thoughts on this 5% down? You think Fannie and Freddie, you think that's a good move? Do you think they're full of crap? They're not really helping out? Or do you think that this is potentially a market mover when rates come down or home prices soften? So let's talk about rates. Big topic. Very, very volatile rate environment. We still have not seen a softening in rates. There's a bajillion things going on. I've talked about it in different mortgage updates and stuff like that. We're having a really nice day in the bond market. Green is good. The 10-year treasury is down. There's so much going on with wars nationally, energy prices, inflation, consumer spending, right? It's just, there's so many mixed signals. What I want to talk about today, though, is because I find that obviously the rate conversation always comes up when I've got clients that reach out to me that want to buy a home. Rightfully, it should. The two things that I always want people to focus on, though, what do you want your monthly payment to be? And what are you comfortable with having your cash out of pocket being? What that means, monthly payment is your principal, your interest, your homeowner's insurance, your property taxes, HOA dues if you have it, mortgage insurance if you have it. That monthly payment, think about that as your rent payment. All in, what's that housing payment? Doesn't include electricity, anything like that, utilities. What are you comfortable with that being? How much cash do you have for your down payment, your closing costs, and your prepaids? Tell me those two numbers, and I can devise a program and a product that suits that. And also I can tell you what sort of purchase price that will buy you. Most people, though, just come to me and say, hey, Dylan, I want to buy a house. What are rates? Like, what are rates? Well, the 30-year average in the United States is 7.79 right now. You can go to Freddie Mac's website, and this is public. And all we've seen really over the past year are, we had a little bit of a dip, but in, the last few months has been rates are just going up. The last 3 years, they've just gone up, right? Last 5 years, right? We saw this low here in 2021, 2022. They've just been going up. But what I want to talk about is what sets the pricing, because it's not the interest rate that changes. It's the cost for that rate that changes based on your individual scenario. So I went through and just kind of wrote down as many as I could, and I came up with 13 variables that dictate your individual pricing. Okay. And this will help. I think, help you just understand, okay, what changes can I make? What can I improve? What can I buy that will help lower the cost for the rate, which in essence helps your monthly mortgage payment, right? So the 13 variables: purchase price, down payment, how much money are you putting down? Your FICO score, which is Experian, TransUnion, and Equifax. What's that middle score, right? That dictates pricing. If you have a lower credit score, if I have a 650 credit score and borrower A has a 750, they're going to get a better pricing, better options, better loan programs. Okay, occupancy. Are you living in the property? Is it a vacation home? Is it a rental property? Okay, if you own or occupy, the rates are lower because it's less risky, right? If I own my home and I have a rental property and I lose my job, what mortgage payment am I making if I can only make one? I'm paying for the roof over my head, right? Loan terms. You're doing a 30-year fixed, 20-year, 15. Think about this in auto loan terms, right? 30-year fixed typically has higher rates. 20-year, 15, so on has lower rates. Property type. Are you buying a single family home? You buying a condo, a manufactured home? Condos and manufactured homes have higher pricing. So if you buy a single family home, you will get better pricing historically. Number of units. Are you buying, back to this new 5% down? Are you buying a single family, a duplex, triplex, or fourplex? Multi-unit properties have higher rates because you're relying on rental income to qualify, right? It's more risky. It's all about risk tolerance. Loan product, conventional or FHA, USDA, jumbo. What loan product are you getting? Those have different pricing. Loan purpose. Am I purchasing? Am I refinancing? Am I doing a cash out refi, right? What is the loan purpose? Am I waiving my escrows, right? If you don't know what that is, that's your property taxes and homeowner's insurance. Is the loan servicer paying those in the mortgage payment, or am I paying them myself? If I'm paying them myself, I am riskier because my loan servicer cannot guarantee that those get paid, and then the county may put a lien on my property. Okay, am I a first-time home buyer or not? There's first-time home buyer incentives that may lower your interest rate. What's my yearly income? There's certain programs that if I make under 100% of the area median income or under 80%, I get a lower rate. And then the day that we look at pricing, right? Rates can change multiple times a day. They could change while I'm shooting this video. So this is the hard part, is when somebody comes in, they have not applied. I don't know anything about them. They say, well, what are rates? Well, I can tell you rates are about in the high sevens, but you can buy it down. You can take a higher rate and get a credit. Are you buying owner occupied? Is it a single family home? How much money are you putting down? What's your credit score? How much money do you make? What's your debt to income rate? Like, there's so many different variables. So that's why these 13 things are good to know. And if you want to get the best case pricing, right, you want to, have a decent down payment. You want to have over 780 credit. That's the optimal pricing. You want to buy a primary residence. You want a lower loan term, but that obviously pushes your monthly payment up. You want to buy a single family home, a single unit, conventional loan. Sometimes FHA or some other products have lower, but it just depends on the scenario. Purchases have lower rates, right? You don't want to waive your escrows if you're comfortable with the servicer just paying it. If you're a first-time home buyer, that could help, right? If your income's lower, that could help, right? All of these things matter. So I thought that was really, really important just to cover, because I feel like I haven't covered that before in any of my updates. Let's look at mortgage applications. I always find it interesting. They're down, right? Mortgage rates are up. Mortgage applications are down. I always try to look at the glass half full on this. And I don't want to sound like just this blind opportunist, like, yeah, you got to buy a home. Not everyone should buy a home right now. I do not believe that. I believe that certain people in certain circumstances, you have an amazing opportunity to purchase real estate right now, because supply and demand, right? If there's more demand, if rates drop to 6% tomorrow, you better bet your butt that there's going to be more demand in this market. And there's not that much more inventory, right? So it's this balance. So when rates are higher, there's less buyer demand, so you can negotiate with sellers. A lot of my clients are getting $10,000 to $30,000 in seller credits, where we're doing permanent rate buy downs to really low rates, or we're doing seller paid buy downs where we're buying their rate down 1% to 3% for the first 1 to 3 years and softening that monthly payment, right? There's a lot of creative financing solutions to lower your monthly payment, either long-term or short-term. And now is the time to capitalize on some sellers that are maybe like, oh crap, my house hasn't sold in a month. It's wintertime. I really want to get this thing off my plate. So first-time home buyers, move-up buyers, relocation, right? If you're moving from a different area and you want to move to Whatcom County because of the weather and the resources and the outdoors, right? All of those people are still buying. Death, divorce, disaster, right? There's the 3 Ds. So just, once again, I know a lot of my videos sound almost like buy now. I don't believe that everyone needs to buy right now, but I think there's some amazing opportunities. Turn times are super, super quick right now. We can get you through processing, underwriting, get you pre-underwritten, get you approved with our Security Plus, which if you don't know what that program is, make sure to go to my website and look in the product videos, or go to my YouTube, which is also Whatcom Home Loans. We back your pre-approval with $5,000 of Evergreen's money. It is an amazing opportunity to make sure that your offer gets accepted, or if you're a real estate agent watching this, to make sure that your client's offer gets accepted. So reach out to me if you have any questions. If you have any friends, family, coworkers that this video may behoove, please do send it to them. Have them reach out to me. I am happy to help and always available. And we will catch you next time on the November Mortgage Update. See ya.